Righto, Money Minders. Bloody Trav, your screen here says it all for today.
Bloodbath, mate. It's a bloodbath today. There is very few companies with a little green square there, which tells me it's a bad day in the market.
It reminds me of that movie V for Vendetta, where it's just all black and white and then just red blood everywhere.
I can't say I ever watched that one, Matty.
Oh, mate, it's just that. Go Aurelia.
Yeah.
Up 10%.
And this is just...
These isolated greens look pretty cool.
This is just the miners as well, right?
Oh.
So you can picture a very similar graphic for the whole ASX and most of world markets as well. It's not been a great day for the old share market.
Yeah. I bet your stockbrokers would wish they were like Trump and they could just say something and move the market. Right, boys, what have we got? We've got Ramelius, Mount Magnet plan update today. What have you got?
Yeah, I mean, I guess that's one of the stocks that is most down today is Ramelius. Another one that is most down is nickel mines. So I'm going to talk about them and some potential royalty changes on the way to them.
Yeah.
And we're going to talk about cobalt, the DRC, and a bit of a tie-in with the LSE as well.
Jeez, go. Love it.
It's all happening. Let's start in our patch though, Matty. Ramelius.
Oh, you'd say like my patch, considering I've got no idea internationally. So I'll stick to me Murchison.
We can educate each other, mate.
Ramelius, as I said there, I think this graph says down 14%. I think last time I checked they were down about 16%. Obviously, everything is down, but they've outperformed the down. So they released their new. It's hard to win in mining, isn't it? They're always been questioned about mine life, and now they've released a 17-year plan for Mount Magnet, and they've been hammered for it. So they're probably like, you can't win with this market.
What were the features that were most pronounced in the commentary and your sort of analysis, mate?
If you look at it's all about comparing these numbers to what they released in the previous sort of long-term plan for Mount Magnet. So they're saying now 17-year period, 2.1 million ounces. The big change is, and the change that they hadn't considered before, which has sort of changed pre-production and everything, is the pit cutback at Arenatus. So they've effectively committed to doing a massive bloody cutback there, extending the life of that pit, delaying the underground and avoiding sterilising ore. So it's obviously impacted them in the short term with the ounce profile. Also, really blown out the pre-production capital, but we'll talk about that in detail. And yeah, so it's but there's a lot of little gaps to fill, and there's probably some read-through of what their intentions are going to be on possibly the deal front. It's going to be pretty obvious when I show you what their incentive will be. So we'll go through it. It's bloody very interesting. Bit of value wiped out. So as I said, 680,000 ounce pit cutback, and that's replacing this 280,000 ounce underground that they were going to essentially earlier. So you look here, upfront capital of 15 mil, but pre-production costs of 336 mil. So effectively saying the pit cutback is 336 mil of capex. But I guess the thing they talked about in the call, which it will become a bit of an accounting thing with the all-in sustaining. So they're classing that pit cutback, if you scroll a bit down to the cross section, as pre-production capital, but it is going through low grade, so it would normally be classed as an OPEX, but there is lower grade material that they will be mining and will be processing, but it is classed as pre-production. So it's a bit of an accounting thing. So like that whole it's essentially that 300 odd mil of cutback is not just 0 grams per tonne.
Can you give us a ballpark of what sort of grade dirt they're going through? Will it?
Well, yeah, if you look at the cross section here, like it's, the green bits are 0.3 to 0.5, your yellow bits are sort of half to 1, so it's sub 1 gram dirt.
Gotcha.
And a lot lower grade, and there's different patches of it. So it's how that'll all be handled on the all-in sustaining cost front. So it's not like complete waste. But, the comments were, it's like, look, we could have gone underground earlier, and we could have sterilised it, to think about the mine plan, from sort of 27 onwards, because you can see on here FY27 on this current mine plan drops from 200 to 136,000 ounces for the annual ounce output for the group. So that's obviously when the cutback and everything's going to kick in. So, but they've obviously said, right, if we do the cutback, we're not going to sterilise as much dirt in the long term, and we're setting it up to be a 17-year plan for what they've got at the moment. So it's, yeah, they're taking a short-term pain, essentially over a few years pain for the Mount Magnet hub for a longer-term view on getting the most out of the ore body, which is something you don't really see, actually. As I always said, the best between the client, the contractor, and the asset, it's hard to get 100% utilisation out of more than one of them. So what's best for the ore body ain't best for the share market sometimes. So on a short-term frame. So, and they're also upgrading the mill. So it's currently 2 million tonne, I'm pretty sure, based on soft dirt, because it's very hard dirt at Mount Magnet. You look at the Bomball index was historically, it said 30. It's saying at the moment it's about 20. So that's like on the very hard scale. So they're saying they're going to add a bigger crusher, a SAG mill, bigger ball mill, and so it'll effectively treat 2.5 million tonne of hard dirt all the way up to 3 million tonne of soft dirt and everything in between. So getting oxide material, and you can see how much the oxide material drops off following that once they get deeper in the pit. There's some big gaps of where they need some oxide dirt to fill, so I think that's where the appetite's going to come.
What are you thinking there, Matty?
Oh, mate, take your pick around the area, essentially. Who knows? Who knows? We know they're pretty active on the deal front usually, and I think this is the base case of what they've got at the moment. Doesn't discount what is around the area, and we know when we say the area, we know Ramelius trucks dirt. So their area can span bloody 200k radius easily, and they'll truck it dirt because the incremental value they'll get out of increasing the throughput from 2.5 to 2.8 with some oxide dirt that they can feed through will be where the benefit will come. So who knows what they'll look at. So yeah, it's how do you predict a bloody 17-year mine plan? You do it the best you can. You see the all-in sustaining cost spikes in FY29, but you just don't know what's going to be in the portfolio then. But I like that they've taken a long-term view of the ore body to set that up for long-term. They've got $500 million in cash. They've got 400 million in Spartan shares at the moment. What they do with Spartan shares, who knows? I would think, looking at this, adding the Spartan dirt would be great because it lifts the grade, but are they going to cough up in whatever shape or form that amount of money to get the Spartan dirt? Probably thinking not. The easier win for them would be acquiring some oxide material from somewhere, some easy win pits to feed in and offset the hardness of the Arenatus dirt. So in the future. So
do you remember when they released the plan last time around Mount Magnet? It actually came amidst the media speculation that they were going to do a deal with Karora. They were in exclusivity with Karora.
Yeah.
Then they released their long-term Mount Magnet mine plan. And at the time, I thought their rationale for releasing it was, it was actually related to, just some potential kind of, deal strategy or requirement in some respect. So they're updating it now, and it's the market's sort of somewhat disappointed relative to what it was before. But I wonder if it's part of a deal thematic that's underway at the moment again with this company.
Yeah. Who knows? could use. I don't think they're going for Spartan. Do you agree? Disagree? What do you think?
Ding. While we're on it on Spartan, no, I don't think. What I think the market's just taken on board very heavily today is that very near term production, that very immediate term capex bill, that 300 plus million, and that all in sustaining, going upward to over $3,000. And I think it's that sort of short term mindset that the market is purely fixated on. And to your point, Trav, and what you said earlier as well, Matty, there could very well be something more in the plans. That sort of mine plan looks like it'll fit something in quite neatly down the track. Just kind of remains to be seen what that is and at what price that could potentially come in the door.
Yeah, I disagree with you guys. I think they own 20% of Spartan. And yes, there's a scenario where it gets too expensive and Spartan kind of have to go it alone. But Spartan, on a relative basis, has underperformed other gold names last 6 months. If you're going to move, if you do want to move on them, you want to convince the market that you're not going to move on them, and then they underperform, and then you acquire them. I think that's what they're doing.
The biggest thing will go against them is Spartan resource growth, I guess, because that'll help them perform. So there's a bit of a tug of war going on there, which you think's going to happen.
Yeah, the lens of them not pursuing Spartan isn't haven't arrived there from this mine plan. That hasn't changed the thinking massively. It's just a sort of price and dilution kind of piece. I take your point on the last sort of 6 months, but yeah, I mean, it's a tough one to call. There's always so many moving parts with these big M&A deals, and this would be, at this point, essentially a merger rather than a takeover, just about,
Yeah, very much so. And look, in addition to that mill expansion, which they're saying is going to be about $80 million, 5 for extra water, 10 to upgrade the power for it all, looking to put in really up it to, I think it's 32 megawatt hybrid power, solar, battery, wind. So, Jesus Christ, hasn't got Tim Taylor and CBE written all over it, lads. Couldn't put it. Tim's probably already called it.
Yeah, he's locked that one up.
Yeah, I think that is Ramelius effectively talking to CBE in that line, saying, "Hey, can you just give us a call?"
It's his bread and butter, right?
Oh, mate,
this is his wheelhouse.
Bread and butter, mopping up the gravy off the plate. Just stock standard bread and butter play for Timmy Taylor and CBE.
I didn't appreciate how substantial cross-boundary energy are, mate, until having a beer with Tim. They do some big ticket power items, mate.
Ooh, come from, especially, well, you would have probably seen a few over in Africa in your trip.
Mate, Coca-Cola.
Yeah.
Enormous.
Just signed a big one there.
Oh, mate, what more branding do you need? How good's that?
It's crazy.
They'll just get the copper as it comes out of the hole and chuck it in the power plant. It'd be bloody great. Yeah, so that's where are we at? So
Penny, you had some thoughts on that.
There's always exploration potential. So and that's probably what's not, and they alluded to it on the call, talking about, break of days positively reconciling at the moment. God, I think the initial open pit to it was coming out at 9 grams. They've still got the underground to come off that they have baked in. They've got drilling to the north to do there. You look at the tenement there, there's plenty of potential on that break of day tenement. They've just hit, was it half a metre at 22.5 grams at the north of Penny. So there's, potential extensions there, just on what they've got. That's 50 metres past the end of the proposed development, so might be a bit extra there. And same at Galaxy at Mount Magnet. So you don't even know. You don't know what they're going to get organically that they can add to fill that gap in FY27. Potentially, you don't know what they're going to pick up via scrip or cash for some potential oxide opportunities to both fill that gap and lift the mill throughput from 2.5 to 2.7 if they can blend some oxide with it when they're in all the hard stuff. So, that's pretty much where I think they're at. So it's like they've given themselves mine life. Still, and Rebecca Rose baked into this as well to come on at, I think it's FY27 when we're going to see that. So that's, I'll get that right. FY28, sorry.
You feel that the market is wanting that to pick up the slack a little bit. There's a bit more reliance on it. I kind of get
there is on that chart. That's a big contributor to their ounce profile. So I just in terms of cash position, they're still going to, the cash they're going to still make with the Penny break a day sugar hit together until Penny runs out. I think Rebecca Ray, I think, had pre-production of 200 and some 200, low 200s for the pre-production. So chuck a bit of mayo on it if you need to. Their PFS was actually from the street said, it was, underwhelming. But I've heard comments like their costs that they actually used for Rebecca Ray were just a bit more realistic than some studies use. So hence the low 20% IRR for it. So, yeah, I think that's where they're at. We'll see what happens on the Ramelius train. I'd love to see these. I think what is it, 60,000 BCM, 60 million BCMs of waste to be hauled from Aeronatus for that cutback. If like a bloody MMS logo's on all those trucks, that'd make me happy. Can you think of extrapolating what they did at Myrie, like getting to the ore early, like along to the scale of 60 million BCMs, what that would mean for Ramelius's mine plan if MMS do the cutback quicker?
I'm connecting the dots, mate, and it's earlier cash flow.
Oh, mate, like unbelievable. So, it's a no-brainer for me. I'm pretty much setting up the whole of Mount Magnet with money of mine sponsors today. Geez, like, mate, it could make that production profile look sexy. So you can already see it in the name. MMS, Mount Magnet Superstars.
Mineral Mining Services, Mount Magnet Superstars. There's a lot of places you could go with this one, but what I know is that when I need to mine and move the dirt, I call MMS.
And Trav, he pretty much every weekend.
Yeah.
He's mining all the time. Oh, I love it. Righto. This is interesting. The cobalt. It's back in flavour.
Yes, I suppose.
Is this going to be called CUT? Cobalt Unit Trust.
They've gone with Cobalt Holdings, but I think you could be onto something there, Matty. So we'll get a bit of a.
I'm just going to leave that there.
We'll get a bit of a petition going, and maybe we'll get a name change happening. But
SPUT to CUT.
I'm going to talk about everything going on in the broader cobalt market, and then wrap up with the CUT piece of it, Matty. So no surprise to anyone. Cobalt prices in the gutter, and it has been for some time. I heard in inflation-adjusted terms, it's essentially at the lowest price it really has been on record. So that's centuries sort of plus type of time frame. It's pretty bad, and it's led to some big decisions from governments, namely the DRC.
Is the price in the gutter just as a result of the copper mine expansions in the DRC, and then B, the nickel cobalt kind of laterite operations that rapidly got produced in Indonesia?
More supply than demand at the end of the day, but demand has grown. So it's just that supply has grown so strongly. So we'll start with what's happening in the DRC. So in late Feb, the government announced that they'd suspended cobalt exports for 4 months. The DRC is the biggest producer. They have about 75% market share of the world's supply. So they're a massive player to the extent that not many other countries are when it comes to the various commodities, the hard rock commodities out there. The ramp up of mines like CMOC's Kisanfu was a big one. Tenke Fungurume as well is a big one. And then you've got the expansions of all these other copper operations has flooded the market. And to get a sense of the scale so people kind of know the rough tons we're talking about, CMOC, the biggest producer in the world, produces 630,000 tonnes of copper and 110,000 tonnes of cobalt. That was their 2025 target, the midpoints, and that's just across 2 operations. The other key players are Glencore and ERG, so that's Eurasia Resources Group, the Kazakhs. The rest of the world's supply, so roughly 25%, is made up of bits and pieces all around the world. You've got the Indonesian nickel mines moving from next to nothing just a few years ago to about 10% of global supply. So that doubled in 2024 alone, just in 1 year, doubled, again, purely as a byproduct. So
it's a byproduct in the DRC assets as well. I mean, all those companies are hunting for the copper, but the cobalt's there.
Yeah, the economics looked very, very good at, say, Kisanfu, which is one of the heaviest cobalt to copper ratios in the world. When cobalt's at sort of $50,000 a ton, those economics look very different when cobalt is down 75%. So they alone, kind of, not many others were really thinking so cobalt heavy, but 98% of cobalt is, if you're counting CMOC in it, 98% is byproduct supply. So not many.
Between nickel and cobalt in the shit, how Murrin is still going. Phenomenal, isn't it?
Yeah.
I don't think Murrin's moving the needle much on global copper supply, but it's Australia's biggest one. Go Australia.
Yeah, I'm not sure how profitable the operation is at the moment, but it's still running as far as we know. So, yeah, and just to round out on demand, a lot of sort of forecasts were pointing to 20% growth this year. That's very substantial. Take any kind of forecast with a pinch of salt, but that is substantial growth by any kind of measure.
Yeah, demand goes up because the price came down.
You'd think, but LFP has been the chemistry winning outright. But that is a huge part of the debate, right? How do you think about it if you're the DRC government? It's a balancing act between not wanting to jack up the price crazy high and disincentivise OEMs, battery makers, car makers from actually using the stuff as well. I mean, you got the super alloy part of the market as well. That's sort of 20 to 30% of the market. A bit less than that, but 70% of the market is batteries. So
wow,
it's a balancing act. So the cobalt price did bounce on the back of this. You got a few different exchanges measuring it in Europe over the past couple of weeks. It's up about 25%. It was up in China as well. Remains to be seen if the OEMs actually have the supply to last them 4 months, or if we're going to see a bit of a tick up again as we get to the end of that period. And on the equity side of it, ERG isn't listed. Glencore, it's kind of irrelevant, so CMOC's the only one we can really go off. And they're up about 15% actually since the end of February. So they've had a tick up on the back of this too.
So what's the export ban going to actually do?
This is kind of open for interpretation, right? If you're going to think how this impacts the market, Matty. So we spoke a lot when BHP were considering putting Nickel West into care and maintenance and shutting it down well over a year ago now. And, you get into the realm of politics. But at the end of the day, a government's ability to manipulate a commodity, a smaller commodity than nickel, this is cobalt, in which it has a big stake, 75% is pretty complicated. But you need to take a long-term view, and I think that's the lens. So what's going to happen over the next 4 months to start with, the ex-DRC producers, the people in Indonesia, for instance, they're going to make a bit more money. And I've got pretty little doubt there'll be some people in the DRC making money out of this one way or another.
Well, I noticed the price of hydroxide shot up because that's coming from the copper in the DRC. But what comes out of Indonesia is MHP, and whereas that prices of that hadn't moved as much.
The Indonesian stuff. Yeah, I didn't focus on that too much, but I mean, let's kind of see over 4 months what it kind of does, because it's been a bit complicated through actions that the Indonesians have actually done, which you might talk about soon as well. But at the end of 4 months, right, you're going to have big stockpiles from all of these companies. And this happened with CMOC in 2023. There was a tax dispute with the DRC. They built up, nearly a year's worth of stockpiles and then just washed them out through 24. And that was part of the reason that the market came off.
There's already massive stockpiles of cobalt hydroxide. Like, if the stockpiles aren't currently with the miners, and a lot of them, I mean, we were in the DRC, we saw like all the mines we visited where they produce a cobalt byproduct. There's just bags and bags and bags of cobalt hydroxide there, and they're waiting for better prices before selling. So we saw heaps of stockpiling happening from the miners, and then talking to people at CMOC or whatever, they're selling it to the OEMs in China who are taking the opportunity to stockpile themselves at very low prices. So one way or another, there's a build-up of surplus of these, bags of cobalt hydroxide, and if it's not actually going into an end product, like, it's just an overhang on the market at the end of the day.
What's cobalt hydroxide look like?
Bags of like a very dark coloured kind of powdered dust, and it unlike lithium hydroxide, a very long mine life as long as it's in a moisture-free environment. So if it's in a shed, you can store it for ages. Like, happy days.
Well, those bags are like 1/3 cobalt. So they need a bit of work on them still to be done. But that's the product that's getting shipped from the DRC. And to that point on stockpiles, the Chinese state, I don't know exactly in what form, but they were stockpiling over 6 months ago strategic reserves of cobalt. We don't do that in the West, but that's a whole nother kind of topic. Longer term, if the DRC does want to keep prices up, it's pretty complicated, right? Because say hypothetically they were able to, you're just going to encourage people to go more down the LFP route, which doesn't use cobalt, or the various other bits of battery technology or chemistry that are non-cobalt based. And, we've seen LFP dominance surge. So in EV share, they're in the mid kind of 40s percentage of all cars sold. And if you look specifically in China, because they don't care as much about range and stuff, we're talking about close to 70% relies on that chemistry. And LFP's even gained market share in BESS, in stationary storage batteries, which a lot of people didn't think it would for a while. They thought, basically on a sort of land space type discussion, you would want to go with a denser chemistry because it wouldn't be taking up and your real estate costs would be lower, these sorts of things. But again, LFP is just becoming dominant. So I'm very curious to see in time what sort of market share the various chemistries have. Nobody knows, and it already looks, every year it kind of looks different. And it does seem LFP is winning on all kind of regards, and that's becoming the dominant one. But this is a market that's seen pretty significant changes from time to time. So yeah, an open-ended one on that front.
What's next, mate?
It's complicated, Trav, and I think there's one more thing we kind of have to piece in here, and it's the deteriorating situation in the Eastern DRC. I don't want to talk too much about it, but again, heaps of moving parts, but suffice to say it's not gone well for the DRC. It's a bit of a geopolitical mess across the world, really, not just in that part of the world. But the DRC urgently needs cash, and it's probably not a complete coincidence that this has happened now. And I've got pretty little doubt that, like I said before, the DRC government, one way or another, will try and profit off this somehow because they need to kind of fund their efforts over there. And I'm sure they're going to be looking at other type discussions like we saw last week, potential conversations with the US to try and tie up mineral deals like we saw with Ukraine. Yeah, it's a tough one. There were rumours that they wanted to look for ex-Chinese support, which was very interesting because I think 2/3 of the cobalt producers and a lot of the miners in the country are Chinese groups as well there. They're certainly majority non-Western, Glencore is really the only one left there. So yeah, very, very tough to see where that goes. On the specific cobalt kind of front, maybe they do an export quota. Maybe you're giving each company a certain amount of cobalt that they can specifically export, and potentially to the point on the actual material that they are producing, maybe they force them to go downstream. Like we saw in Indonesia, maybe they want more value add in country. It's a kind of tough bargain to kind of drive when you're not making any money on it, but it remains to be seen where we go on that one.
Hey, what about yellow cake 2.0 or brown cake 2.0 or dark coloured cake 2.0?
Dark coloured cake. This is the interesting stuff, Matty.
It's very interesting. This.
Yeah, I found this fascinating. So there's a group led by a guy called Jake Greenberg, and they want to list a cobalt holding company, like I said at the top. Jake was part of the team that founded Yellow Cake. Every uranium bull knows Yellow Cake. They've got about 21.7 million pounds of uranium locked up in a vault somewhere, and he wants to repeat that recipe for cobalt, and he's talking about this being out of love. He's talking about this, he talks about it in the context of mean reversion being a moving kind of principle in financial markets, with cobalt being no exception. So they're looking to raise £180 million and list in London in May. So it's happening quite soon, and they've actually tied up a deal with Glencore, who reportedly take a 10% stake in the company, as well as agreeing to sell about US $200 million worth of cobalt to the company over a undefined long period of time.
Yeah, so effectively the same as what Yellow Cake's deal is. So Yellow Cake have the contract to purchase $100 million US of uranium from Kazatomprom every year. So I assume they're going to structure a very similar thing with Glencore.
Would you chip in, Matty?
Geez, you're not filling me with confidence, Cobber.
Well, with all those kind of thoughts in my mind, I kind of admire the counter-cyclical thinking. Like, I'd have to do a lot more research, but...
Well, I tipped in a fucking SPUT at the wrong time. Lucky I sold it. It went down bloody another friggin' 50%.
Yeah, I mean, it's safe to say most people hate cobalt, right? Like, we've been saying it for literally years now. Like, battery makers looking to make batteries that don't have cobalt because of all the artisanal related challenges in the DRC. You can go from one challenge to the next. So
yeah,
it's thinking outside the box.
It's thinking outside the box. They're like, and usually our industry is self-correcting. Lower prices, then you get a contraction of supply, and then all of a sudden prices go higher again. But when 98% of your production is byproduct, you don't have the same market forces in place that constrict supply. If anything, supply is growing because the world is demanding more copper. And as a result of that, you don't have the same mean reversion, as Jake would put it, on your side necessarily. You've got to take that into account.
I'd look at, if you look at the journey of Yellowcake and SPUT, probably pretty similar to this. A lot of their pounds were purchased early on at lower prices. So for 200 million, you're getting a lot more cobalt. That's how they build the size of the trust and yada yada, and then sell the bloody thing.
Well, that's the thing.
I know about SPUT. So it's a similar starting point of when they probably started the Sprott Physical Uranium Trust.
It takes tons out of the market, so to a certain degree, it helps their cause if they can do it, But to what degree can you do that? And I'd just underscore what you just said there, Trav. It's a byproduct, and that adds a whole layer of complexity to this. We haven't seen any supply response from what we've seen. Hardly any. I mean, they're stockpiling at mine sites, but limited in terms of mines being canned and those sorts of things.
Yeah, so when's that? Is it?
May. Watch this space.
Very interesting.
Very interesting. Also,
so that 180 million pounds, in the float, that's going to cover what they are going to buy off Glencore effectively, are they? 200 US to 180 million pounds, roundabouts.
Yeah, but they said long term, so I'm not sure when those 200 would be paid.
It's not straight up.
It's light on details at this point, but we'll see.
Righto. Speaking of something that makes cobalt as a bloody byproduct, nickel.
If you check Nickel Industries, it's one of the companies probably most punitively attacked for its market cap by the gyrations today in the stock market. It is down intraday. It was down about 19%, and this is like before today's movement. It's talking about a $3 billion market cap, smashed down 19%. So that's a whopping move for a company of that size. And it was such a substantial intraday move that it triggered a speeding ticket from the mighty ASX. And it was the response to ASX's question that I think we have to talk about, because it kind of provoked me to do some research. Question 3 in the speeding ticket from ASX says, is there any other explanation that the company may have for the recent trading in the securities of the company? To which Nickel Industries pointed to, firstly, there was a sale of approximately 178 million shares by their shareholder called PT Harum Energy in a block trade at about 69 cents per share. And secondly, they point to, I'll quote this, the press has widely reported that the Indonesian government has released a proposal for public consultation that would increase royalties for operators across multiple commodities, including nickel. The current royalty rate on nickel ore is 10%, whilst the proposed royalty range for public consultation is 14 to 19%, depending on the prevailing nickel price at the time. Based on the information released, the proposed royalty would be 14% at the current nickel price. At this point in time, the proposals have not been legislated. However, should this change, the company will continue to fully comply with Indonesia's laws. Yeesh.
Is PT Harum Energy Indonesian?
It is. It's a
very interesting.
Coal company. Yeah. I think. Nickel ore. That wording. What do you think?
Well, I did a bunch of research and there's varying kind of changes to royalty regimes on all of the nickel products, including nickel ores
and metal,
nickel pig iron, MHP, all of the above. Yeah.
So is the conversation being had that there'll be an increase in royalties on matte, pig iron, any further processed metal? Yeah,
I'll add some context here first. It was Reuters that led the Western media with the coverage of this potential royalty hike, as I've highlighted here. But the primary source is actually comes from Indonesia's Ministry of Energy and Mineral Resources on the 8th of March. So that was Saturday. So it's kind of fascinating how Nickel Mine's share price was largely unaffected all through trade on Monday. And then Reuters' story landed kind of aftermarket Australian time the clever shareholder Haram, they block out their stock at 69 cents, and when I last checked, the stock was about 63 cents, so lower than they blocked it out at, even though the shareholder did it at a pretty substantial discount to last.
So break down this actual government proposal that's been reported upon.
In a nutshell, Indonesia, they actually had elections last year, and as of October, the new president and administration were sworn in. It sounds a bit abstract, but the president who was sworn in, President Prabowo, probably saying that wrong, but his policies, they included a lot of popular ideas such as free meals for school children and pregnant women, and these kind of popular policies they resonate with the public. But Indonesia's a huge country, right? And there's over 200 million people, so that's a lot of food.
Especially pregnant women are eating for two.
I suppose the context of this proposed royalty change is honestly like, think of the budgetary implications of a new president's pretty substantial populist spending agenda. You need more revenue to spend more. So I've looked pretty hard to find the actual kind of guidance put out from the ministry itself in relation to these royalty changes, but I failed in that endeavour, but I found pretty good secondary sources. The articles that talk about this, even when you Google Translate the Indonesian ones, they all source like quotes from the Director of Minerals and Coal at the ministry by the name of Tri Winano himself. So I think there's credibility to all of this. There's two regulations that are suggested to be revised. One relates to the coal royalty rates, and the other one to the nickel product royalties too. And like Nickel Industries says in their response to ASX, that the nickel ore royalty is proposed to change from a fixed 10% to a range of 14 to 19%, depending on the reference nickel price. They reference this HMA nickel price in US dollars per ton. You can see that scale of what the royalty would actually change to based on that rate. So the higher the price, the more you got to pay. And it doesn't stop at just nickel ore, sadly. Like you touched on, JD, the downstream is going to take a hit too. So you've got royalty rates for ferronickel and nickel and pig iron are currently 2% and 5% respectively, but this proposal would see them lift to a range of 5 to 7% depending on the reference price. And lastly, nickel matte windfall profit has been removed under the new proposal, with the fixed 2 to 3% royalty rate to be revised to 4.5 to 6.5% depending on the reference rate. To be clear, like these are proposals at this stage for public consultation, as Nickel Industry says. But the concerning thing for investors is this is a proposal that has come from the new government of the country. It's not like an opposition party that is proposing something that has no chance of kind of getting over the line in a legislative sense. And also like this, the president of Indonesia, this is a president of a country who was quoted last year describing democracy as tiring, costly and messy, and said there was room for improvement. So make your own mind up on the probability this proposal turns into legislation or not. What is clear is equity markets are nervous, in particular investors in Nickel Industries. I just pulled up the relative share price movements of all the companies that produce a nickel product from Indonesia that I could find, and check the relative sell-off in Nickel Industries versus the other listed names I could find. It leads the pack substantially. That's
the one at the bottom.
Yeah, it is.
Jeez.
It is. It's pretty stark, right? I think there's potentially a few reasons for that. Substantial underperformance versus peers. They could also be oversold. Like, you've got to do your own homework here. But if you look at the proposed royalty changes, they punitively punish sales of nickel ores. And if you check Nickel Industries EBITDA for full year 2024, US 100 million comes from sales of nickel ore mining. The other US 200 million comes from their share of NPI and MHP produced from the downstream processing. So there's a fair whack there on all fronts. And what probably hits them again is you got to look at the balance sheet too. So they got net debt of US $832 million. And if you thought of the status quo royalty regime there, like with that sort of net debt, no issues. These are fantastic assets that are really low on the cost curve. Like that amount of debt's no worries. But the proposed hike suddenly eats into a giant proportion of your EBITDA, and all of a sudden, that gearing kind of doesn't look as appropriate as it used to look under the status quo. So I just thought I'd pose a question to you guys, like hearing this news, observing this, and the kind of out of nowhere implication that it has on stock price. What do you think of this?
Got a couple of thoughts. Firstly, mining companies with single kind of assets with debt are always risky, and it can often come from left field. What hits you, you know?
This isn't a single asset company. They've got a lot of different mines, but they're concentrated country risk.
Sorry, that's what I was referring to, single jurisdiction rather. And my other thought was trying to tie it back to stuff I'd read about Indonesian nickel last year. They obviously wanted to dominate supply of nickel. That was pretty much written in legislation there. But even these prices were levels they weren't happy with. They wanted prices to be higher, so the government makes more revenue via royalties and taxes and all these kind of things. So just trying to think kind of creatively. Are they trying to disincentivize potentially more? I know that's thinking like 1 or 2 steps kind of ahead, but this would certainly be a big disincentive. Like, you guys remember the reaction to the coal royalties in Queensland, and just how disgusted BHP, Glencore and every other miner in the state was. You know, companies don't like this for a reason. You know, you want stability to guide your mine plans, to reap the rewards for the capex you've sunk into the ground a long time ago, and the reaction would be pretty heated. Even if they are Chinese companies or whatever, you know, they're not gonna like this one bit. What do you reckon, mate?
It's like Indonesian Nickel's just, and the government, they're all just fighting between themselves because they've gained control. Like they're just, it's like they've caused the price. Well, they obviously have caused the price themselves to be low, because they wanted the market control, and it's just, it's a weird concept to think of.
I don't know
it's
if
all happening in one country.
I don't know if there's like a unified voice or opinion of Indonesia. I mean, we're talking about changing government over this period of time, and this is not just going to apply to nickel. It's going to apply to coal in a different capacity to all of the other minerals they produce in unspecified kind of quantified royalty changes so far. On the other commodities, it's not just nickel. But I hate seeing this. Like, if you just take, so one of Nickel Industries' operations is the Oracle Nickel project, which Nickel Industries, they have an 80% interest in, and all of the flood of investment that you saw go into Indonesia, a huge amount of that was concentrated in what is called Morowali Industrial Park. And the reason Morowali Industrial Park attracted phenomenal sums of foreign capital is because, like, the Indonesian government wanted to focus on the value add in the downstream, but they also provided the necessary tax breaks to warrant the huge upfront capital investment that was required to develop and build out that industry. You don't just get industry decide to put a smelter there because you're all of a sudden banning the export. You've got to create the conditions that allow for it. So with Oracle Nickel project, for example, concessions. These concessions included a 100% corporate income tax reduction for 10 years from the commencement of commercial production, followed by a 50% reduction for the next 2 years. And they also got a 10-year exemption from withholding and tax collection by third parties on sale proceeds. So that's the environment that lets you kind of go to your board and warrant the huge amount to make a very long-term kind of capital investment, because you're thinking about an asset 30-year mine life. Discount that back, it all works out if we get these tax breaks. Then all of a sudden, the royalty gets lifted. So who gives a shit about your corporate tax break? Because you got no tax because you don't have any net profit anymore. Like,
is that
it's a hell of a tax
have they
concession.
provided similar concessions to other?
There were similar ones. There were inconsistencies by project, but they were same ballpark. Yeah.
It was one of a few
by a different government,
industrial
or
parks.
the same government.
Same government.
Yeah, wow.
Well, sorry, you mean
when they provided the tax breaks compared to now potentially lifting the royalties?
I'm not sure on the differences in what the previous administration and this administration kind of stand for, but
it is a different government though.
It's a different government.
The joys of different governments.
Yeah.
This is, and when you hear about the way that the majors are talking about investing in Argentina at the moment, it's because that framework, the RIGI framework, actually provides absolute certainty over a long period that is required to amortize the huge amount of investment that you're embarking on. If you imagine just like putting hundreds of millions or billions of dollars into a project in Indonesia, and you get these tax breaks, happy days, and then all of a sudden the royalty's up, so you don't have any profit anymore. Like, massive rug pull. But if you have certainty in a regulatory framework for a period of time that your downside is protected too, that actually lets you make the infrastructure like investment that's required.
There is no in my view, absolute certainty in mining. If you're building a project in someone else's country, you can get as comfortable as you want, and I think Rigi has done a great job to get people to that level. But you're building something in Argentina, and when Malay's out of government, things could change. I hope they don't, and yeah, they probably won't. But there's always that risk. We've seen changes across the world in almost every country. That is part of the risk of investing in mining, unfortunately.
Do you think nickel sulfide developers and ex-producers would look at this as a positive for them?
Yeah.
They'd be thinking this is the sort of potential Indonesian catalyst that could change the landscape.
These are the cracks that start to emerge. Yeah. Commodities are cyclical, and for the varying factors, in like this case, the government wanting a bigger piece of the pie, that's nothing new under the sun there, right?
Yeah.
And it's a incrementally huge piece of the pie that they're wanting. I mean,
it is the pie.
It's fascinating, really, really interesting. That was a good one.
Yeah.
We'll see where it goes and whether that does in due course become legislation.
Yeah, wow. Oh, very good, lads.
Get your tickets to Ozai, man.
Yeah, and it's $100 that's not going to go up by 15% unexpectedly. It's just $100 off.
Get it while you can.
Some other contractors won't chuck a random royalty on you. MMS, Grounded, Sandvik Ground Support, CRE Insurance, K-Drill, a transparent invoice. No chance of a bloody royalty. WA Waterboards, Sweet Quattro Project Engineering, Cross Boundary Energy, Udaroo Money Miners.
Udaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.